Terraform Labs co-founder Do Kwon was spotted in Serbia.
Ladies and gentlemen, we got him.
Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. December 12, 2022. A tweet from CoinDesk stated, Do Kwon, the internationally wanted leader of Terraform Labs, has reportedly been spotted in Serbia. By @Egrici. According to a Monday report from CoinDesk Korea, Do Kwon, who is wanted globally in relation with the failure of the Terra ecosystem, has traveled to Serbia through Dubai. The stablecoin Terra USD, or USD, which was depegged from the American dollar in May, was created by Terraform Labs, of whom Kwon was the co-founder and CEO. The token that was utilized to stabilize USD before the depegging, Luna, immediately began to decline. In a cryptocurrency winter that most recently witnessed the bankruptcy of cryptocurrency exchange FTX, the Terra domino became the first to fall. The Terra domino fell first in a cryptocurrency winter that most recently saw the collapse of cryptocurrency exchange FTX. Kwon was reportedly in Serbia as of Monday, according to the Seoul Southern District Prosecutor's Office, and the local Ministry of Justice was in the process of requesting the Serbian government's cooperation in the case. According to CoinDesk Korea, Kwon departed South Korea in April for Singapore before traveling to Dubai in October and then Serbia. His passport has been revoked, making it impossible for officials to examine official records, therefore they are worried that he may have already gone to another nation. Kwon was in Europe, according to a previous story from Bloomberg. Daniel Shin, Terra's other co-founder, was the subject of an arrest warrant request from the prosecution, but the court dismissed it because it didn't think Shin would try to leave or hide evidence. December 13, 2022. According to a tweet from Cointelegraph. Are you familiar with the golden cross pattern? It's normally a sign of good news. Due to its remarkable success record in marketplaces, a golden cross pattern on the timeline excites cryptocurrency traders because it offers rich prospects in the future. Unlike the bearish death cross pattern, the golden cross typically comes before long-lasting uptrends. For example, the S&P 500 has historically returned returns of 15% or more in less than a year following the appearance of a golden cross. The track record of the golden cross in terms of the cryptocurrency asset Bitcoin is equally outstanding. Particularly, since 2010, the signal has shown 7 times on the daily Bitcoin graphs, 5 of which have resulted in extremely strong bull runs. Do you know what is golden cross pattern? Let's talk about moving averages, or MAs, first, as they are the golden cross's essential component. The average price movement for an item over a certain time period is captured by a moving average. In mathematics, they are calculated by adding a group of prices that are recorded during a given period of time, such as hourly, 4-hourly, daily, weekly, or monthly, and dividing the result by the total number of prices in the group. The 50-day moving average, also known as the short-term MA, and the 200-day MA, often known as the long-term MA, are the two moving averages that are typically the focus of golden cross observers. The short-term MA crossing over the long-term MA results in a golden cross pattern. According to the trend, purchasing interest in a specific market has increased during the last 50 days compared to the last 200 days. A golden cross's mechanism of operation. Golden crosses frequently precede notable price increases in both traditional and cryptocurrency markets, which is why traders interpret them as buy signs. Golden crosses have occasionally been followed by false breakouts, though. As a result, prior to making a choice, one should take the golden cross pattern into account together with other technical indications. To begin with, traders might use the Relative Strength Index, or RSI, a momentum oscillator that identifies an asset's oversold and overbought circumstances, to anticipate probable price retracements. This tactic could have prevented many traders from suffering worse losses in February 2020. See why, will we? When Bitcoin traded for about $9,500 on February 1, 2020, its 50 and 200-day MAs created a golden cross. The price increased to as high as $10,500 in the following 2 weeks after a brief period of mild excitement. During that time, Bitcoin's daily RSI increased over the 70 mark that indicates overbought conditions. Due to its overbought state, Bitcoin fell near its 50 and 200-day moving averages, the $8,500 to $9,200 area. However, it finally fell below $4,000 when March rolled around, coinciding with an international market crash brought on by the start of the COVID-19 epidemic. According to the case study, golden crosses are not always reliable in forecasting future trends. However, by using fundamentals and momentum indicators to predict price movements over the short and medium term, they may just support traders and analysts.
Moving Average Convergence Divergence, or MACD, Average Directional Index, or ADI, Stochastic RSI, Rate of Change, or ROC, and other momentum indicators may be among them. To put it another way, investors are cautioned against investing too soon into a golden cross structure. Instead, they might hold out on making a trade until the price has moved sideways or lower and found short-term support. In unstable market circumstances, shifting moving averages can potentially change what constitutes a golden cross.
On the same date, December 13, 2022,
a tweet from Cointelegraph indicated
the CFTC filed a complaint against SBF, FTX, and Alameda Research, alleging that the former CEO of the now debunked exchange set up features, allowing Alameda to use the crypto exchange as a line of credit for its lenders. Sam Bankman-Fried, FTX, and Alameda Research are the targets of a complaint brought by the United States Commodity Futures Trading Commission, or CFTC, which alleges breaches of the Commodity Exchange Act and calls for a jury trial. Injunctive and other equitable relief, as well as civil financial fines, were sought by the CFTC against Bankman-Fried, FTX Trading, and Alameda Research, according to court documents submitted on December 13 in the Southern District of New York.
The complaint claimed that SBF directly gave orders to FTC staff to implement features enabling Alameda to utilize the cryptocurrency exchange as a line of credit for its lenders.
According to the CFTC, Alameda and FTX cameled monies and freely utilized FTX client funds as if they were their own, also as capital to deploy in their own trading and investing operations, contrary to Bankman-Fried's assurances and without notification to FTX consumers. FTX client monies were allegedly utilized by Bankman-Fried, his family, and other FTX and Alameda employees for a range of personal expenses, including the acquisition of opulent real estate, the use of private plane, both legal and illegal personal loans, and individual political donations. Due to an extradition agreement between the United States and the Bahamas, authorities in the Bahamas detained Bankman-Fried on December 12 as a result of criminal accusations being brought in the latter country. The Securities Act of 1933 and the Securities Exchange Act of 1934 both contain anti-fraud provisions, and the U.S. Securities and Exchange Commission filed charges against SBF on December 13 claiming breaches of both statutes. A House Financial Services Committee hearing on the collapse of FTX was set for December 13 before Bankman-Fried was arrested. According to his prepared statement that was leaked, the former CEO mostly attributed the collapse of the exchange to others.
That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.